Hello everyone, my name is Koma Signolo. Welcome to another video by Attention Matrix, where we try to make learning fun and easy. Please comment, like, and subscribe if you would like us to continue making this content and you enjoy it or find it helpful. Now on to the next video. Let's get right into it. Okay, hello. Welcome to our second video on financial mathematics, and in this video we'll be looking at sinking funds. Okay, so sinking funds is what we will be looking at. Right, what is a sinking fund? Well, a sinking fund is an amount in future that you want to work towards. Okay, it's an amount that you want to have in the future to use it for a specific purpose. Okay, to either use it to pay for your education, to pay for a piece of equipment that you own, or whatever. It's basically it's basically a future value. So sinking fund, you use the future value formula to calculate your sinking fund. Let me just put in a bit more perspective into where a sinking fund can be used. Say you've got a washing machine. Okay, let's say you've got a washing machine. Right, you are a business, you own a laundry or laundromat. You own a laundromat where clothes get washed and stuff, and you own a washing machine. Right, you own a washing machine. Now, this washing machine over time will depreciate in value, right? This washing machine will depreciate in value. It will lose value over time. It will depreciate. And you will get to a point where you cannot use the washing machine because it will be more expensive to you to maintain the machine or to fix the machine when it gets damaged and depreciated than it would be more expensive for you to fix the machine than it would be for you to just get a new one, right? So you've got this machine, right? You've got this machine, this washing machine. This is your washing machine there. You've got it today, and you know that after 5 years, you will need to get a different washing machine. You'll need to replace that washing machine because this washing machine, the black washing machine, will have lost value. So after 5 years, you want to buy an identical washing machine. Okay, now you will agree with me on a couple of things. Firstly, you will agree with me that this washing machine that I have today, this washing machine will cost a certain amount of value. Let's say a certain amount of money. Let's say this washing machine costs 10,000 rands. Okay, this washing machine costs 10,000 rands. It costs 10,000 rands today. Now, as soon as you start using it, and as soon as it starts getting depreciated, as soon as it starts depreciating, it will lose its value. Over the course of 5 years, it will lose its value, right? And after 5 years, you will want to sell it for some value. Okay, you will want to sell it for some value so that you use the money. Okay, so let's say you sell. Okay, after 5 years, you sell the black machine. You sell it. It costs 10,000 rands today, but after 5 years, you decide to sell it. When you sell the black machine, you'll get some money for it, right? The money that you get for the black machine will be less than the 1,000 rands because it loses its value, right? It's like you buying a shoe. If you buy a shoe today and you wear it and you use it and whatever, and you want to sell it to someone after 5 years because you don't want it, you won't sell it for the same amount of money that you bought it for today, right? It will have depreciated. It will have lost its value. Okay, so after 5 years, you decide to sell this machine in this case, and then you get an amount of money. The amount of money will be less than the 10,000 rands. Okay, cool. Now you get that amount of money. Let's call that amount of money S, or let's call it S for sell. Let's call it S for sell, or let's call it X. We call things X. Let's call it X. Okay, but then we use X in our future value formula. Let's call it S. Okay, you sell the machine and you get your amount of money S. Okay, you get your amount of money S. Now, you want to use that amount of money S to fund your new machine, that machine there that I drew in red. Okay, so you want to use S use S for new machine. Use S for new machine. You want to use S to get that new machine, that new washing machine. Let me just use S for your new washing machine. But we did say that S is less than 10,000, right? Firstly, S will be less than 10,000. The money that you sell your current machine for in 5 years will be less than the money that you bought your machine for. But also, this machine, although identical, you want to buy an identical machine in the future, but this machine in future, this brand new machine in future won't cost 10,000. Why will it not cost 10,000? Because 10,000 rands today is not what 10,000 will be in the future. As a matter of fact, 10,000 will be less in future, right? It'll be less, right? Think about bread. When you buy bread today, think about how much bread used to cost, say, 2 or 3 years ago. Let's say it used to cost 10 rands. Bread today does not cost 10 rands. It costs about 18 or 19 rands because of what? Inflation, right? Because of inflation. So the point is, the new machine in future will not cost 10,000 rands. It will cost more, right? It will cost more. This new machine will cost more. Now follow me here. I know this is a lot to take in. Let me just recap. You own a laundromat, right? A laundromat that you own is a business. It needs washing machines. Say your laundromat is based on just one washing machine. This is the black washing machine that you see here. That's the black washing machine. You buy it today for 10,000 rands, right? You use it for 5 years. After 5 years, it gets depreciated, it loses its value, it can't function properly, it starts giving you problems, it makes your company a loss, so you decide to sell it. You want to sell it, but the amount that you sell the machine for is going to be less than the amount that you bought the machine for. Doesn't matter, you sell the amount for whatever amount that you sell it for. That amount is S, and you want to use S to buy the new machine. But you can't use S to buy a new machine because, one, S is not enough to get you the new machine. S is not enough to get you this new machine. And two, this new machine does not cost 10,000 because of inflation, because the value of money, the value of 10,000 is not what it used to be after 5 years. Okay, after 5 years, 10,000 is it's less valuable than it would have been the 5 years before. So what do? Okay, so you've got the black machine that you own now. You've got the red machine that you want in future. Right, you sell this machine for S. Now you've got S. Okay, let's say this machine costs 17,000 now in future. This is the new machine. It costs 17,000 in future, and you know that this machine is 10,000 today, but after 5 years, this machine will be worth 6,000. Okay, let's say this machine is worth 6,000. Now you sell this machine for 6,000. So S is equal to 6,000, right? S is equal to 6,000. After selling this machine for 6,000, you've got 6,000 now. How much do you need before you can buy the new machine? You need an extra amount, or you need enough amount of money to get you to 17,000. How much is that amount of money? Well, it's 17,000 minus 6,000, and that is going to give you 11,000, right? It's going to give you 11,000. So you need an additional 11,000. 11,000 is how much you need in the future to save up in order for you to sell this machine for 6,000 and buy the new machine for 17,000. In order for you to buy the machine for 17,000 after selling your current machine for 6,000, you will need 11,000. So 11,000 from your pocket is how much you will need to put into buying this new machine. Now, this is what we call the sinking fund. This is what we call the future value that you want. The 11,000 here is the amount that you want. Okay, and to get to that 11,000, you just simply use the future value formula. So what is the future value that you want? The future value that you need to save up for is 11,000. Okay, so the future value that you need to save up for is 11,000. And once you save up, now how much do you need to put into a savings account or into an investment account for you to get to 11,000 after 5 years? So after 5 years, once your machine is damaged. Okay, and at what interest rate? Let's say the interest rate that you're working with is 12% per annum, compounded annually. Okay, compounded annually. Now, all you do is use the future value formula and you substitute you substitute all this information into the future value formula and you get your value for X. You use the future value formula. Okay, remember I said you use this future value formula when you want to save up for an amount of money. You want to save up for an amount of money. In this case, what you want to save up for is 11,000. You want to save 11,000 by putting in a certain amount of money every year for the next 5 years into your investment account at an interest rate of 12%. Okay, now if you put in that certain amount of money at an interest rate of 12% for 5 years, then you are going to get to 11,000 and you're going to be able to take that 11,000 and put it and add it to the 6,000 that you will have sold your machine for, so that you can get the 17,000 that the new machine will cost, so that you can keep your business running efficiently. Okay, so that is the whole principle behind the sinking fund. The sinking fund is simply your future value. Sinking fund is a future value. Remember that, drill that into your head. Sinking fund is a future value. It's the money that you don't have currently that you need to save up for. Another example could be, okay, you know that you are currently in varsity and you will need to pay, say, 500,000 at the end of your varsity days. Okay, so you start saving up money today so that you get to the 500,000 at the end of your varsity days. How much do you need to put into a savings account or into an investment account to get to that 500,000? That's what a sinking fund is. You're working towards a certain amount. You're putting a series of payments into an account. Those payments are accumulating interest so that you get to a certain value in future, so that you can use that money in future for a specific purpose that you've set for yourself. Okay, so there's a lot of ways they can spin these questions. There's a lot of ways they can attempt to trick you, to ask you things differently, to make you to think. But essentially, this is the principle behind sinking funds. Okay, I'm not gonna go through a lot of examples. Remember, we will make separate videos covering examples, but my main aim with these videos is to give you the principle: when to use the formulae, how to use the formulae, why to use the formulae. That is my main aim. Okay, and examples we will cover in separate videos. Okay, so that is the principle behind the sinking fund. Till next time. Listen number one, listen number one. Listen number one, listen number one.